value of our cities is closing in on $1 trillion. Ashley Church is the CEO of Property Institute New Zealand. He joins us now. Good morning.
Good morning, Haley.
Ashley, first, why do we need a report to tell us that the value of our house is jumping? I mean, don't we all know this?
Yeah, so one correction, that's actually not the value of the house, it's the value of the total stock of all houses in New Zealand. So
right.
That figure's gone from a little more than 660, or a little less than 668 billion 3 years ago to currently 941 trillion today. That's so almost a, sorry, 941 billion today. So almost $1 trillion, closing in on that magic number of $1 trillion. So to put that in context, that's a 41% increase in the value of all houses in New Zealand as a composite, as one big group, over a period of 3 years. To put that in some sort of context, if you go back to when the country was founded in 1840, Treaty of Waitangi, etc., all that period of time taking us right up to 2015, in the 3 years since 2015, a 41% increase in that total value. That's a massive increase in the value of housing. Yeah.
And is that trend going to continue?
Well, that's the interesting thing. When you look at these figures, so we've mapped 6 centres. We've mapped Auckland, Wellington, Christchurch, Dunedin, Tauranga and Hamilton, and all of those centres have all of those centres have gone up. But last year, which was the year that we thought there was the flattening in the market had begun, they all continued to go up, even Auckland. Now, that's not entirely surprising, because what tends to happen during a boom is that Auckland will taper off and the rest of the country, because it went into a boom later, will also take a little bit longer for their boom to carry on.
Yeah, it's like a ripple effect, right?
Absolutely, but Auckland's continuing to go up. Auckland went up 16% just last year.
So if the values, when you're looking on TradeMe or you're looking at the property website, seem to be flattening, how is Auckland still going up?
Oh, there's a range of reasons for that, and probably the main one, I suspect, and we'd need to analyse these figures and break them down month by month, which we will probably do over the next few weeks. What I suspect's probably happened is that most of that 16 enters front-entered at the beginning of the year, because most commentators, when they look at the Auckland market, recognise that flattening is definitely taking place.
So the new next report might show that flattening?
Yeah, so in a year's time, I suspect we'll find that there has been a flattening off and that Auckland is definitely flattening, and then if we look at that, we'll see that it was perhaps in that first few months of 2017, toward the end of the year, that tapered off. But even so, it's a very, very surprising increase over that period of time.
What can we say? I mean, is this a good thing? Our residential property stock is worth $1 trillion. What can we do with that?
Well, there's some good and there's some bad, as there always is in these situations. So the good is, one of the interesting things is that property often gets criticised for not being part of the productive sector. In other words, it doesn't actually add to the productive value of the country. This figure actually gives the lie to that. So there's an interesting thing. We tend to look at things like deposits of coal and oil and gold and those things, even when they're in the ground, and we value them as part of what we call, to use an old-fashioned term, what we call the commonwealth of the nation. That's where that word comes from.
Right.
And we don't tend to see property in that way, but when you look at this figure, nearly $1 trillion worth of residential property, that's actually part of the commonwealth value of the country. So just to finish that point, Haley, what that means for the country is that a number of things. It means that when countries look at us as a place to invest, we are that much wealthier. We're another $300 billion wealthier.
But is it wealthier? Because the stock hasn't changed. The houses haven't grown. But
it's what they're worth. It's what people are prepared to pay for them. So yes, absolutely we are. That's what inflation does. It increases the value of a country over a period of time. So it's got some value in terms of people's confidence in this country in terms of investing in it. It's got some knock-on effects in respect of some of the indicators about where this country stands in the wealth ratings internationally. It also means that individuals who own property are actually wealthier than they were 3 years ago.
Speaking of that, let's go and ask the age-old question, or the modern question really. What about first home buyers? Is this bad news?
So it is bad. So the bad side of, so there's some really good stuff out of this. The bad side is it has an impact obviously on the ability of first home buyers to buy houses. That's obviously got, that just means it's got worse over 3 years. It's got even more difficult than it was. It's the other thing I think which is a little bit scary is some of that $300 billion increase in the value of the real estate portfolio in New Zealand has been debt funded, which means people have borrowed money to buy it, to the extent, and this is a bit scary for the country, to the extent that we borrow money at low interest rates, we become more and more susceptible. The economy becomes more and more volatile to a dramatic increase in interest rates. So it balances us a bit precariously in respect of what that might mean if there was going to be a rise in rates, and that's a worry.
Okay, well, thank you so much for your time this morning, Ashley Church from the Property Institute of New Zealand.